Alrighty, guys, so I just typed here. Here is the chat. Ask any questions here. We're going to get started with class. I'll put this chat log above here. So if you guys have questions along the way, feel free to ask any questions and we'll get started. So I think we're set here. You guys can see my screen fine? Okay, great. Guys, please mute yourself on entry. Charles, that was you. Please keep that muted. All right, we're going to get started now. Let me just make sure I can mute people here. All righty. Alrighty, guys, so let's get started. First off, I want to go over the current charts of the Diamond ETF and the Qs. I want to teach you guys exactly what it is that we're looking for and you know, types of waves and consolidation areas that we're taking advantage of. I have some charts below here that I'm going to be going over first and show you guys how our week panned out, why members had such a great week, and what we looked for along the days here, along the week. So let me get some of these pulled up here. So here is the Diamond ETF from the 14th. You can see the dates are up here. And this is where I was telling members, this is on September 14th, as long as we held above the 20 and 10-day SMA here, and we broke through the 262 resistance, we were going to get our next wave higher, and we were going to get a breakout, and that would be time to enter into a trade. And all these charts that I have saved here, these are areas that we've been looking at in the past, like back here. I think this was back in June or May, somewhere around there. We were waiting for a breakout out of this channel, out of this box here. Once we got that breakout, we were able to make substantial profits with some weekly or monthly calls. And so one of the members just asked now what it is we're looking for. Let me go over that. I was going to go over this at the end here, but this is what we're trying to capture. Let me make this a little bit larger here. So we're trying to capture these runs, these waves higher. And how we're doing that is by, first off, we're making sure the market conditions are right and the chart has a proper setup that we can do this type of analyzing. And as I was saying in last class, what we were doing, we were looking at the consolidation phases, support, like you see back here on this red box here, this red channel. Back in this time frame, I was going over members, telling them, hey, we held support here. Here's the box. Once we could break out of this box here, we're going to get the next wave higher. And that's exactly what we ended up doing. Once we had that breakout of this candle here, we would have entered into a trade and either got this week's, next week's, or a month out until expiration, and we would have captured that gain. And then based on the classes I've gone over with you guys of how to find the tops here, that's what we're looking to find. Exit would be close below the previous day's low, and our exit would be right there on this trade. So then we're looking for a little consolidation here, a bounce down to that yellow 10-day SMA before we had our next breakout. And then we had some consolidation before another breakout. And as you see, that continued that type of chart pattern. And that's what I've been going over with members. As you see, this is a chart on the 20th here, September 20th. And I've been telling members, once we got a breakout here above the 10-day SMA, and as long as we didn't close below either the 10 or the 20-day SMA, which is the yellow and blue lines here, we were going to have that next wave higher to all-time highs. And now if we are looking at the chart right now, here's another chart. This is from the 14th, like I said. You know, so you could see my style of teaching here. by telling members here was the consolidation phase. We were waiting for a break above that 262, and we made sure that it didn't close below that 10 and 20-day SMA. That would have gave us a signal that markets were heading lower, and then we would have been looking at this green line right here as a next support area, or the 50-day SMA as our next area that we could drop down to before going higher. So that's what I'm going over in my classes each day in the trade room, showing members these are the patterns we're looking for. These are the areas that we're looking for as far as stop losses go, as far as targets go, entries, and all of that. So as I was saying, this chart here is from the 14th. We were waiting. This was a consolidation area, profit-taking area. The markets held above the 20-day SMA, which was great. I actually, if you see in the chart back here, I went over on somewhere around September 17th. You can see these are all my notes. These are all, whenever I type something up, if I go type something now, I'll leave this stuff here. That way you guys could see, okay, this is what Dave was talking about in the past. It happened. Now here's what we're looking for. So as I was saying here, the diamond needs to break above the green 262 resistance for the next wave higher to all-time highs. Here's that 262, which I've been going over in the trade room with members, this green line right here. When I go over it, it turns red. But that was that breakout. Here was the consolidation area. We were waiting for that breakout. We could have entered right here when we had that break clear above the 10 and 20-day SMA. But I said we really want to focus on a break above that 262 resistance, and then we would have that next wave higher to all-time highs. And what happened as soon as we broke that resistance, we had those large candles. Notice during the consolidation periods how small the candles are. Okay, this is important, guys, and this is what I try to teach and go over in the trade room every single day. We're looking for these phases that we could take advantage of. This week, we took advantage of the markets, and we made some substantial gains along the way here. And like I also tell members, so this is the Diamond ETF. This is basically the stocks in the Dow. So this chart's telling us one thing. It broke out. Now what I could see happening with the Diamond ETF is if we don't break out, this week, if we close below, let's say if we close below 266, then I would say we could retreat and get back down to that 10-day SMA, consolidate before we break higher. But if we get a break above yesterday's high, then I would say, hey, markets are still strong, and we could see a climb up to that 270 area, Dow 27,000. So that's what we're looking for with these candles. They're going to tell us everything. As you see here with this wave, watch what happened here. Every wave is telling us the same thing. Let's go back to here. So we see right now on the Diamond ETF, this chart, we see we are currently in the breakout. We had the wave higher. I alerted members this week. We made some large profits on some trades, and it was a really easy week with the Dow stocks. Now, how do we know when this run is over and when she's going to consolidate again and see some profit taking before that next wave higher or before breaking below support and heading lower? So what we're looking for, just like you see in this wave back here, we had this huge climb. What happened then? The next day, the candle, it failed to break above the previous day's high. We had a red candle, and then same thing. Next day, it broke. It didn't go above the previous day's high, and it went lower. That's a sign immediately that the stock is going to retrace. You're going to see a consolidation phase. You're going to see some profit taking. So that's a sign there when we see that top, that candle, and then the next day it fails to break above the previous day's high, and then the next day after that we're failing again to break above the previous day's high. That's telling us that there's going to be some consolidation, profit taking, or a trend reversal. So that's what we're looking for when we're micromanaging trades on a chart. If we're looking at one of the three main chart patterns, for example, let's take a look at RH. This was from like a week and a half ago. We entered into RH. We had a huge earnings disappointment. The stock dropped. I said, guys, actually right on this candle right here, I said, let's watch for a base of a hook pattern. So this is one of the 3 types of chart patterns that we trade. And I said, let's take a look, watch, and see if this forms a hook pattern. It formed that base. So I sent members alerts. Let me bring this up here, and I could show you guys exactly what I'm sending members. Let's see. So that was on either the 5th or the 6th. So let me see back to my archives here. RH, when was this? The 4th, 5th, or 7th? Where is it? Here it is right here. Here's one of them. Let's see here. So here's a chart from September 12th. This was RH. I was sharing with them the hook. I'm trying to find the good chart, though. Here we go, guys. So on the 12th, I shared with them in the trade room, and I also sent out an email. I said, guys, we have a base here. She's forming the hook pattern. Let's take advantage of that. This is when we entered into the trade. I said, guys, we formed the base here. A close for this trade would be if RH closed below the base. It's a simple exit strategy. We're looking for a close below that base. It did not close below that base, and as you see in the background here, RH, I gave them the target. I said this is where we're going to take profits, and that was between 139 and 140. We could see on the email alerts and also on the target here, and so you've seen that. I told them a break out above the area there. I mean, I'm sharing charts all the time with members. So here was the day that we closed out the trade. I said I sent out an alert. You see here I had it saved as RH hook pattern completed on September 17th. So on September 17th is when we closed the trade. And as you can see, here was the 17th right here. And if we zoom in a bit, you see she got all the way up to a high that day of almost 143. So it was well above our target. I said our target would be around 140 to 145, and it got well above our target. We locked in profits, and we locked in some large gains on that trade. So that's what we're trying to go over as far as teaching you guys what to look for. Like I said, diamond ETF here. If we get a candle tomorrow that fails to break above Friday's high, that's going to tell me that we might see some consolidation. Then we're looking for that support area right around 266. Dow 26,600. If she breaks below that, then she's going to retrace back down to this 10-20-day SMA, have that consolidation phase before it breaks higher. So that's what we're looking for. So if tomorrow comes along and we get a close above yesterday's high, then I could see us hitting that target of Dow 27,000. The markets are looking great long term. So this is micromanaging basically what we're doing right now. Now, as far as looking out further, like if you want to do a trade for November, December, January Expo, then what we're doing is we want to enter on the consolidation area and on a break above once we get a confirmation. So like here, we consolidated, we broke above that resistance. That would have been our confirmation right here to buy once we broke above resistance on September 14th. The next day it retraced a bit, but that's okay. It didn't break below. That's when we entered into a trade, actually. We actually got into diamond calls. Actually, here it is right here. So you guys could see, we actually do what we say. We entered into calls. We got the September 14th. That's the diamond put here when we seen it retracing. This was a day trade on, when was that for here? That was on September 14th. We got a put. So on this day here, that was a day trade. I got the wrong picture here, but we entered into a trade once it broke above that 262, and we took advantage of that ride. So what I'm saying here is, once it breaks that consolidation area, it's okay if the stock retraces a little bit, as long as we're waiting for it to break below our stops or our targets. Once it gets to our targets, we exit the trade, take our gains, move on to the next trade. Now, here's the thing. This is the Diamond ETF. This is the Dow. Now, let's take a look at the NASDAQ, the QQQs, and that tells us a different story here. And then I'm going to go over some charts with you guys as far as what we want to look for here. So here's the chart for the Qs, the NASDAQ, okay? We had a nice break. I told members back here on the 17th, 18th, 19th, I said, guys, we need to break out of this box here to get a signal. Okay, so the next day we broke out of that signal. I made a couple of trades on Amazon, some on Google. Oops, sorry about that. So we made some trades. She retraced. I said, all right, if the next day she comes down, that wasn't an official trade. It was just a trade idea, and I'm going to go over that with you guys because I wanted to see a break above 185 for us to enter and then hit new highs of 187 plus. So this is what we're looking for on the Qs this week. All right, if Qs open up on Monday and it heads back down into this channel, then that's not a good sign. Qs are still going to need some time. NASDAQ tech is still going to need some time to take off. But I do kind of like the trend we're going here. We're seeing a wave, consolidation wave. We broke above the previous wave's high. So even though Friday it was a quadruple witching day, that was fine. I'm expecting some move like that. But if tomorrow we have a bad day and the markets decline, you could look for a retracement back to this 50-day SMA, which is down around 180, 130, right around there. So that would be about a 2-point. That would be over a 1% move lower. So that's what we're looking for. If I see a candle tomorrow that's above this box here and starting to climb, it looks fine, then this is what we need to look for. So this is the QQQ. This is, the tech stocks, basically. So then let's look at individual stocks and see what they're telling us. So here is Amazon, for example, and what we're looking for here is, first off, we have our base. This is the box I've been telling members about. Let me actually pull this up here. $9.21. That was a day trade. So here was what I told members on September 20th. I said that for us to get into tech stocks, specifically Amazon here, we want to see a break above the 10 and 20-day SMA. Once we get a break above that 10, 20-day SMA, that's going to be a signal that we're going to head higher. However, if we break below this channel here, here was the consolidation phase. This channel I have here, that's for something else that I went over for a specific trade. So this is what we're looking for with Amazon. So with Amazon, we're looking for a make or a break above or below this box. If Amazon could break above this box, she's going to head up to 2000 to 2015 and then possibly head for new highs. So if it doesn't, if it does the opposite, if it breaks below this box, then here's the support levels that we're looking for. So what I'm teaching members is, A, when it's in a consolidation phase, stay away from it. Wait until you get those confirmations. Like I said, a confirmation here is a break above this box or a break below for puts. So if we want to buy some calls, we're waiting for a break above this box to climb to 2,000. That would be our target number 1, and then our target number 2 would be all-time highs of around 2050. But as of right now, tech and Amazon, we're waiting because the charts aren't telling us much. Let's take a look at Google, for example. Google is the same thing. It's been in this consolidation phase for quite some time. You see the arrows I have here, the green arrow and the red arrow. We're looking for a make or a break above or below this. And then our confirmation would be the next day. For example, if we got a break out of this box on Monday, and then on Tuesday we got another green candle, that to me is a buy sign. And then I'm looking for 215 to 230 as the target, possibly up to 1250. I'm sorry if I said 230. 1215 to 1230, and then a high of around 1250, and then possibly up to resistance of around 1270, and then possibly all-time highs. And then what else you're looking at, like I said, you want to see what the general market's doing, and then also take a look and see what, if we're in any type of trend. And the holiday trend's starting to come up, the holiday cyclical cycle. And, typically retailers, online stores, they do well during the holiday cyclical trend. So that's what I'm waiting for specifically. If I see a breakout here, I'd be buying Google. If it broke below, here's where it could possibly head down to next support around 1110. So now let's take a look at some of our current trades. We made a trade on BP. It was a while ago. I don't know if it was early last week or the week before that. But here is how TSE works. Here's the trade feed. This is what members get sent, and I'm very detailed in my charts that I send out. You could see here. Now, again, this was in addition to what our current trade was on BP. I said BP looks like a good buy here, if not yet in it, or can add to our current BP trade. New target of $46 a share. Wait for a pullback, read below, and then I go over the further details of the chart here and what to look for. And then also on every alert I send members, I'm sending the target areas, where we're taking profits, where we need to break above to see the next run higher, and then our stop areas. And I go over that in every trade that I send out. Here's the other BP trade. This is the current one we just made 2 days ago. As I scroll down here, you'll see the one that we made like last week that we're up significantly on. We closed out over $16,000 in profits on BP trades on calls from this week. And then we also got the October 19th. And then this trade alert right here, as you see, it was telling members we could either add to our trade or wait for a pullback and then enter into a new trade. So as you see, when I'm sending out alerts, I'm going over everything we need to watch for, look for, our targets, all the indicators that are telling us buy, sell. Here's actually our picture of our gains. We made a $16,237 profit on BP. We bought the September 21 Expo 43 strike calls. We paid 76 cents a contract for it, which is $76 a contract. We sold it for $1.42, and that's a net gain there of 1.42. Find that. We just made an 86.84% return trading BP based on this breakout that I seen here that we captured a large run on. So that was a really nice return, 87% return for a quick $16,237. Fedex. I'm giving you guys these, showing you what we're doing. So FedEx, first off, this was a second trade on FedEx. Let's go down here and show you guys. And as you see here, when I'm sending out alerts, I'm showing you guys all my research behind it, along with my chart analysis. You see the target here for FedEx. With the holiday coming up as well, I expect FedEx to do very well. Therefore, I made a larger trade on FedEx. Now, here was a trade alert from 3 days ago. This got sent to members. I said trade ideas and official trade. Amazon calls or spread entry on breakout above 10 and 20-day SMA. So I'm telling members here, once we get a break above that 10 and 20-day SMA above 1955, that's when we're going to enter into a trade. So I'm giving them a heads up, hey, this is what we're looking for. Once we get a break above that, we're going to be entering into Amazon as it just broke out of that channel I just went over with you guys previously. And then here is the official Fedex trade alert. So FedEx, we bought the 245, 247.50 vertical bull call spread for $1.35. FedEx was at 246.70 at that time. It reached over almost 251 on Friday before the Dow pulled back a bit. So that's looking great. We gave ourselves plenty of time. That's the other thing too when I'm teaching members and going over charts. We're teaching you how to pick those expiration dates. Obviously you don't want this week's or next week's expo. We gave ourselves plenty of time, over a month until expiration. And the beautiful thing about this trade here, we entered for $1.35. Max it could be worth is the difference between the two strikes, 245, 247.50. So that's $2.50. Divide that by 1.35. Our max net return on this trade is 85.18% return. So on this FedEx trade, as long as it's above 247.50, which right now it's at 247.28 after market hours on Friday. So as long as this stock's above 247.50 on expiration date, October 26th, we're going to make an 85.18% return. And this is a higher probability trade. I gave strict stop areas on the trade. As you see here, max gain 85.18 with shares. I go over exactly what we need to look for here. This is Amazon. This is the one that I told them about. We're waiting for that break above that 10 and 20-day SMA. If we got that, that would be our buy signal. So this was the first chart from this trade alert. So saying about Amazon, we want to see a break above the 10 20-day SMA on confirmation. So I'm going over them. I'm going over with members what we're looking for here as far as our next trade. And then here is our FedEx trade. I sent a picture. I said it dropped. It had a nice drop. This was our first trade we made on FedEx. We were looking for a hook pattern. We entered on, I think it was the 17th. Our stop was 240 below base. We entered right here when it was at 244.96, and that was a great entry. I mean, it was a great trade. We captured that hook pattern, and then now also we're going to look for that climb higher. So also here's an alert on Walmart, WMT. Whenever I send out an alert, I'm telling them exactly what we're looking for. We would get a confirmed buy signal with a close above the 10 and 20-day SMA. And this is something we've never done at TSE before. I had some people that didn't want to follow my plan. So now what we're doing at TSE is more of the teaching and analyzing our current trades, going over everything step by step, and really dissecting the trade, dissecting the market, dissecting charts. We're doing everything here. So like I said, Walmart, it's been holding above that 95 support area. We would get a confirmed buy with a close above that 10 and 20-day SMA, and then we would have 100 target for our cyclical holiday trend. So this would be a holiday trend. We would be looking at the October 19th minimum expo. I'd probably be going for the November or December. So now what's going to happen, I sent this out as an alert to watch for it. So now if it doesn't follow our trend, if it doesn't give us that buy signal, I'll forget about this trade. Like I said, we were just watching it. There's no trade on this stock. I just sent it out as an alert. Hey, this is what we're watching for. That way members could get a heads up. Hey, let me check this out. Let me see what happens. And then you could follow along and learn from that. So we would get our buy signal if it closed above that 10 and 20-day SMA. If we did do that, we entered into a trade, then I would send out a email text alert. Hey, we have an official trade on Walmart. Here's our targets. Here's our stop areas. And I'd give all that info. So here's an alert. We closed our RH and BP trades for large gains. I showed them. Here was the initial entry on RH. I said, guys, RH is forming a base here. This was when it was at 124.39. And as you can see, that was RH. We go back here, look at RH. It had that big drop. And like I said, guys, in my previous class, this is part of that 3 main chart patterns that I like to trade. If we're searching and looking for these types of patterns, we find them. We say, hey, RH here, it had that big drop. It's forming a base now. Let's see if it holds that base of around 120. And if it does, and we get that first green candle higher, that's going to be our entry. It confirmed that that hook pattern type of one of the 3 main chart patterns that we're looking for, and we take advantage of that. We have the drop, the shaft, we have the base consolidation, and then we have that rebound, and we take advantage anywhere between half of that drop from the top to the base, or if there's resistance in the middle. Here there was no resistance, so we have 140 as our target. It got up to 143 almost, and we took our profits. And here's further pictures how I was telling members. Like I said, I really go to detail on everything I do now. And I'm showing members here. Here is first the drop. This is the shaft of the hook pattern. Here is the base. Next candle higher would be our entry. And we got our entry right here. This is when we entered the trade. And then there's our target. And then it completed our target. So here is a step-by-step analysis of exactly what we do at TSE. First, I'm sending members that, hey, we have a drop here. Let's watch for a base. And as you can see the dates on here, I have them saved on here, but you could see here September, whatever the dates are. So I'm going step by step. Here's the drop. We're looking for the base. Here was the base. I told members, guys, we got the base. Our next buy is our confirmed candle higher. We got our next confirmed candle higher. We entered here, and we had our target. And then here you see hook pattern completed. We exited. We had substantial profits, and it even went on to climb higher. This was at 135.84. It went all the way up to 143 almost. So this was great. It was a great trade, and we made large gains. Now here's BP. So BP we entered. Here was NBEV. I alerted members at $4.45 a share. It got up to almost $10 on Friday. We took profits at 7:30. I got in at $2.80. I made an alert previously when it was at $2.03 to watch for it, and I got 10,000 shares at the time, and then I sold for right around $5 and I think right around $5. I sold the majority of them. I only had like 1,000, 2,000 shares left, and then I sold the rest at this price. So we had some solid profits on NBEV. Here was our entry at 280, and then this was our resistance channel. I told them if we broke this, we would definitely hit highs of $7 from previous highs. And what did we do? We did exactly that. So this is what I'm going over with members. Every day I'm sharing with members, hey, if this happens, we entered here on this day. So here's our resistance level then. We broke above that. So actually on this day here, I said, guys, we're going to go and hit all-time highs. The next day we did. I actually even had someone in the trade room saying that it was going to go lower, and I told them, I said, there's no way this is heading lower. Over the next few days, these huge green candles are pointing to massive volume, massive buying, and we were going to head for all-time highs, which we did, and we benefited from. So here's a trade on Boeing that we made last week, 5 days ago. We bought the 365 strike call. We sold it. We bought it for $3.80, so $380 for a single contract. Sold it for $5. It was a quick 31.58% return. If we held on to it, we would have had much larger returns, as you see Boeing chart here. So let's dissect that a bit, see why we entered Boeing. Again, what did I tell you guys the main chart patterns we're looking for? This was a breakout trade. We entered Boeing, as you see, 5 days ago from today. I in the alert here, I said, I am doing this trade as Boeing just broke resistance. Next target is 375. I like today's candle. Just likely a quick swing trade, would close tomorrow on a move to 370 plus a share. A stop loss at 359. Update, closed BA stock. Stock still looks good for long term. Said it would hit, would be a quick overnight swing trade. Did as expected. So I entered, is this my entry price? So that's my entry price was when Boeing was at 364.98. So if you guys are members, whenever you want to see like the time frame of when I bought a trade, here is the price when we purchased this trade, or when I sent out this alert. So it was at 364.98 when I purchased. So 364.98. So that was right around. That was right here when I said it broke the resistance. Remember in the alert here, I said it just broke resistance, and the next target is 375, right here. I said Boeing just broke resistance, next target is 375. Stock price was 364.98. So if we look here, here was the day it broke the resistance, 364.98. I entered right here. I said the next target was 375. It's got up to around 373, and it's still climbing. So it's still climbing. I said it was going to be a quick swing trade, and that's what I did. It was a large trade, and I took a quick profit off of that. So that's what I'm doing at TSE. Like I said, Boeing, I've been sharing with members. Once we break above this 360 resistance, or 361 resistance, that's our buy signal. We got our buy signal. It hit our target. And then we move on. So, this week we might see some retracement, some consolidation. If it does consolidate back to, 361 to 365, and then we get the breakout, then our next target would be resistance, and then a further breakout to, 375, 380. So that's what we're looking for, and that's what I'm teaching. I'm teaching members how to use RSI, how to use MACD, how to chart stocks, how to find your entry, your exits, your targets, and that's what we're going over. And as you can see here, I'm sending the pictures out with the trades. I'm telling members when we're closing the trades. I'm telling members when we're class starting 9:30. I send out all my alerts on the website. So that's what membership is. That's how I teach. I'm teaching the very specifics. If you guys go on our YouTube channel, you could see the three main types of chart patterns that we look for, and that's what we do at TSE. We're locating these chart patterns. Here was a hook pattern. Boeing, for example, that was a breakout. We took advantage of. RH, like I said, that was a hook. BP, that's a trade we're still in now that you seen at the top there. That's still in breakout phase. I see that heading up to $46 a share. And for example, let's take a look at what an option can give you. Let's take a look at BP here and show you guys how options can make you substantial gains with. This is a different account here. This is a profits account on E-Trade, so doesn't let me do options on here. Buy to open, sell to open. So let's take a look if we did a trade right now on BP with our expectations of it hitting, $46. So it's currently at $44.67. So what if we did the October 19th? I would go out further, maybe the November Expo, to be honest with you guys. But let's just pick the October 19th. Then we'll go over the November. Let's say we did the 44.45 strike call. So it's already 67 cents in the money. It only costs 59 cents to be worth $1. So this trade, if it costs, we're even going higher than the mid price here. So $1, divide that by 0.59. This trade right here is going to give you a maximum net return of 69.49% as long as BP is above $45 a share on October 19th. It's at $44.67 right now. All it needs to climb is 33 cents higher, and you just made a 69.49% return. And what we're looking for, like I said, this chart's telling us everything here. We have a clear breakout with BP. It's climbing. We're also going into a cyclical trend with the cold season, winter season coming along. You're seeing a lot of hedge funds buying into, the energy sectors now with the winter coming along. And also, these are going to be your better trades because if the economy did take a turn and took a shit, like there's still staple stocks that still people need, like energy, food, and things like that. So, BP is one of those stocks, even if the market turned, to crap, everyone's still going to need gas, oil, winter season's coming along. So BP is one of those stocks that's going to continue to climb for this cyclical holiday trend. And that's what we're taking advantage of. Like I said, you already seen I closed out some large profits on BP already. I shared with you, where was it here? Here was our trade on BP for this week's expo, monthly expo. We made $16,237. And like I said, this is all from following the patterns. You see BP, you see RH, you see FedEx, you see what I'm trying to go over with Amazon now. Like I said, Amazon, we're looking for a... when you put that down and it does that. So Amazon, we're looking for a make or a break above or below this box. And then I have specific targets if it does each of those. So if it breaks below this box, I'm looking at 1850 as a target. First, it's going to struggle a little bit with the 50-day. If it breaks below that, there's no doubt in my mind she's going to drop down to support at 1850. And if it continues to drop, then the next support is around 1750, possibly around 1800. So that's what we're looking for. In my mind, I'm already thinking about what I'm going to do if it breaks above this box or below this box or this channel. So that's what I'm looking for. And like I said, this with Amazon, as you could see here, it's all part of its longer term trend. If you look here, usually it's been holding up pretty well at the 20-day. Every now and then it does drop down to the 50-day. You see it dropped here to the 50-day just for a brief time, and then it headed back up above it. So right now is an important phase that we're at. And like I said, that's why we have this channel. The 50-day to 1955, that's the area that we're watching for it to break. So if it breaks below this, then the wave higher are over for now until we touch on that support and then get that confirmed bounce. But like I said, if we're watching the chart here for Amazon, you see every time it had the breakout, every time it consolidated and we've seen profit taking, it came back to that 20-day SMA. It had the run here and then it came back just below the 20-day SMA. Had the run, consolidated, came back down to 20-day SMA, broke out, consolidated down to a 20-day blue SMA, broke out, consolidated to blue SMA, and then here's where we had the problem where it failed to make a new high on that wave or breakout. That's why we're starting to see lower highs. So this is one thing we don't want to see. We don't want to see a high and then the lower high and then the lower high and then us have a drop and then another high like that. So as you can see, we can anticipate what a stock's going to do based on its chart. So if I see a big drop here, then I know, hey, it's going to climb again, and then it possibly can drop, and then climb again to lower highs, drop, lower highs, drop. So that's why we're looking for a make or a break above or below these channels to go over certain areas and to give us signals to buy or close out a trade. So if you guys have questions, you could comment in the chat there if there's any stock in particular you want me to go over. Like I said, FedEx, let's take a look at that one quick. FedEx was a nice trade. I told members we got in that on a hook after earnings. We got in right here on the 20th. It had a big break the next day, made over $7,000 on shares of stock and up significantly on the calls and the spreads that we have. And we're going to see, as you can see right now, there is some, let me get the line here. Let me make this. So as you can see, there is some resistance right around 250. So we get a candle above 350. So we get a candle above this yellow line right here. So if tomorrow comes along, we get a candle above that, there is no doubt in my mind she's going to head up to that 255 area. So if I see a candle tomorrow above this area, above that 250, by the end of the day, I'll enter into more calls on Fedex and then set my target for 255. Because if I'm entering right around, let's say 251, and I'm expecting a 4-point move higher, that's almost a 2% move higher, and you can make significant returns on that if you're buying some regular calls or possibly doing it in the money spread. So that's what I wanted to go over with you guys. Like I said here, take a look at this. Let me find out where that chart is. Hold on one second. Let me get this chart back up. So like I said, on this chart, this is what we're looking for when we look at when we're looking at the general markets. When we're looking at the general markets, we're looking for a break, a wave higher, and then we could trade the stocks in that indice. So this is a diamond. So, you know, when you get that consolidation and that confirmed breakout above that consolidation phase, then you could enter into either the diamond calls, shares, or you look into the stocks that are in that indice, and then you see, hey, what stocks will give me the best return? So we're looking for that breakout. You're only wanting to trade weekly expos if you're in that breakout phase, that wave phase. Other than that, to be on the safe side, you're looking for at least a minimum of 2 weeks out to be on the safe side. That way, if you have a big drop the next day, it's not devastating your account. And that's important. And as you see, one of the members just posted in the main trade room about how he was making large positions, like he was having 20 trades on at a time. He's been a member of TSE for over 6 months now, I believe, and he's learned so much about how to control your account, control risk management, how to find entries, exits, stops, targets, and this is what we go over in the trade room all day. Once you become a member, you have access to this. And what we do in here all day is we go over charts, stocks, members ask questions, and we're going over things all day long in here. And we're going over specific charts, entries, exits, what we're looking for, and all day long in the trade room. Usually we average between 50 and 60 people in the trade room. Other people are just professionals. They have other jobs, so they're not active in the trade room. They just wait for those trade alerts via email and text. So, this is what we're doing all day. We're going over, like a member asked about HRC here, and I analyze the chart for them, show them what to watch for. And I'm teaching as we're going along. As we're in a trade, I'm teaching about it. Hey, is this a normal move, or is this something we need to worry about? And that's what we're going over all day long in the trade room. And then we also have a great group of members that go over their trades, stocks that they're watching. Here was PayPal, for example. I told members, I said, guys, look at this. We're making higher lows. Here's a stock to watch. PayPal, if that breaks above this key resistance area of around $91 a share, I'd be a buyer, and then I'd be a seller. I'd take my profits once it reaches double top right here. So these are the things we're teaching and going over in the trade room. And then as far as the trade alerts go that you guys get via email and text, we're going over exactly what we're looking for on a trade and where our stops are, where our targets are, where we're going to take profits. That way you know ahead of time what to look for instead of just waiting for my text or email. You're knowing what to look for, and we're teaching it. All right, so I just got a message here. Dave, comment how important for members to stay immersed and connected on a daily basis with all the activity. Here it is here. Dave, comment how important for members to stay immersed and connected on a daily basis with all the activity that the team is watching versus just popping into the trade room from time to time. Seems that it would be difficult to keep in the know if you're not following on a daily basis. So that's what I'm telling you guys, how we're doing things here. So when I send you guys out an official trade alert, what I'm showing you guys are the specifics for that stock, that trade that we're in. If I give an idea like I gave back here on Amazon, here it is here. I said trade idea on Amazon and official trade on FDX. So when I say a trade idea on Amazon, I'm saying, hey, as you see in the alert here, Amazon calls or spread on a break above the 10 and 20-day SMA, above 1955. And then I share the chart below and say, hey, this is what we're looking for. We're looking for a break above, you see the blue line here, the yellow line. These are the yellow is the 10-day, blue is the 20-day SMA. So I'm sending an alert out saying, hey, this is what we're looking for. If we get a break, a green candle above that 10 and 20-day yellow and blue SMA, that's going to be our buy signal, and that's when we're going to have 2,000 as our target, possibly 2050 all-time highs. But until it does that, it's not anything yet. That's why it just said trade idea. We're watching that. And there's no trade on Amazon until it breaks that. So what he's saying is if you're just basically looking at the emails, then you're going based on what I share in the charts and in the text. But if you want to join us in the trade room, we go over the details each day of what the stock needs to do. For example, here's a chart on BP, right? I just have here our stop is below the 10, 20-day SMA. Our target is 44.15 to 46. And then I give updates like here. So what he's saying also is in the trade room, I'm also going over, let me get rid of this thing on top here. So in the trade room, I'm also going over the details each day of the moves. So what he's saying is in here, let me scroll up a bit so you guys can see what he's talking about. So as you can see here, I'm telling members I'll follow this channel for now with Amazon. If you're just watching the alerts here, that's fine. I'm giving you guys the entries, the signals, when to buy, when to sell, what our analysis is on the trade, our targets, our stops. I'm telling you guys what everything is I'm looking for my trades. And then if you want to join us in the trade room, we're just going over the details of those trades every single day. We're looking for new trade setups. We're looking at new charts. Some of the people, we actually have our eyes on J&J right now. I think this is a good stock. I think this is going to be hitting back up to 140. I could see this hitting 145 to 147, 148. You could see it's in a clear breakout phase. Here's a perfect example, guys, again, of the phases. You have your breakout, consolidation, breakout, consolidation, breakout, consolidation, wave higher, breakout, consolidation. Your breakout, wave higher, and you consolidate, and, you move on from that. And then you could see it does the exact reverse when the stock's heading lower. You see here we have a high, a drop. We have another high, but it's below the previous high, and then a drop. Another rise, but it's below the previous wave higher, and then a drop. another rise, but it's below the previous waves higher, and then a drop, and then a rise again, but it's below the previous day, so it dropped. And then our confirmed buy on a chart like this is once we get a break above the previous high. So here was our, you see, like I said, you have your waves, drops, and they're each making lower lows on those points. So the first time you get a break above that point, like here, if it consolidated here, a buy would have been a breakout above here, above 127.50. And then here it had the drop, and then it had the break here. So then we're looking for a break above 125. So then it consolidated. So then you got your break above 125. This would be your entry. And then you rode it from 125 all the way up to where it's at now, and you captured that entire wave. You could have added on the pullback to the 20-day, or you could have took profits once you've seen it. Like I said before, when it fails to go above the previous day's candle's high, that's a sign that it might be out of steam and consolidate, see some profit taking before that next wave higher. So what we're doing is we're micromanaging charts in the trade room intraday, and then we're sending out alerts once we see those breaks. So it's very detailed teaching what I'm going through in the trade room as far as each candle, tick by tick, day by day, what we're looking for as far as, hey, is this a normal day? All right, this chart or this trade is fine. Let's go on, find another trade, see something else that catches our eye, something that we could trade, and we go from there. Another stock. Let's see. Do you guys have any other stocks you'd like me to go over? Facebook. Someone just messaged. All right, let's take a look at Facebook. Facebook is another stock. As you see, guys, I have all my charts set up specifically for the way I trade and the way I teach. Okay? Like I said, I've taught this to previous employees and never wanted to teach it, so I'm here doing it now with you guys for you to learn to become a better trader. So what we're looking for, Facebook, look at this. Every time here, this is just me analyzing it right off the bat right now. You see when it had its growth, when it had its climb here, it stayed above the 20-day. When it was in a consolidation phase, a longer-term consolidation phase, it just bounced between the 10, 20, 50-day SMA. This was your phase that you really don't want to stay. Here's where you got your short sign, clear break, close below all the SMAs, and you see how it the SMAs tightened up here, combined, and then you got that cluster, and then you had a big break below. That's your time to buy some puts or short the stock. Then you're covering or selling your puts. The first day it gets above that 10-day SMA, and then as you see, it climbed from there. And what you've seen is every time Facebook retreated, you've seen that consolidation phase. So you see the wave higher here, you see the breakout, the consolidation, breakout, consolidation. And every time there, it held above this blue 20-day SMA. Okay? So what we're seeing now is it's still in a downtrend. It's doing the exact opposite of when it rose. Now it's dropping, and we're looking for a break above this 20-day SMA as our buy signal. So as of right here, I told members when it had a drop here, as long as it held this base, you could possibly trade it up to 170 target. I said your stop would be a close below 160. And it climbed. Actually, this was on the 20th when I told members about that. It had that climb. Now, if you're in that trade, your stop is closed below the 10-day. But as far as looking at this trade right now, for someone that's looking to buy it, you're looking for that close above that 20-day blue SMA. If it does that and then it breaks that 170 target, then there's no doubt in my mind that she could climb back up to 180 to 185. 180 to 185 if it breaks that 170 target and closes above that 20-day SMA, that blue line there. So as you can see here, we have an oversold RSI. We have a MACD crossover. So the MACD crossover, that already gave us a buy signal. We're waiting for that climb on the RSI here. And like I said, most importantly, when it comes to charting, we're looking at the SMA support and resistance for our main signals. So like I said, a break and a closed green candle above the 20-day SMA, that would be our buy signal. You're going to probably see a little bit of resistance around 170. It breaks and closes above 170, then you're going to look at 180 to 185 as a target. As far as, if you're shorting the stock, you're looking for another move below that 10-day SMA. So like I said, you see it's in a phase right now. You see when you have the big drops and then, a phase where it climbs and then it has a big drop, it climbs, and then it has a drop. So that's what we're making sure doesn't happen with this stock right here. It climbed up to almost the 20-day, dropped, climbed up to it, dropped, climbed up to it. Now the question is it going to have that large drop and get down to that base of 150? Or is it going to break above that 20-day and have a reversal here? So these are the things that I go over in the trade room in detail day after day, with members. So we'll send out our regular trade alerts. I'll give you guys all the information you need on that in the actual email. I'll say, hey, this is what I'm looking at. This is what the targets are, the stops. This is where you want to exit the trade. That's my personal area where I would exit the trade, and where to go from there. And I'm showing you guys the targets for each of my trades that I'm making and posting to you guys. And as you can see, if we're just following these trends, the main chart patterns that I've been teaching you guys, you can make substantial profits. Like the BP trade, this is just the September 21st trade. We also have the October 19th. That's up over 49% now, I believe. So we have a huge gain on that trade. We already locked in this gain. So we have $16,000 profit on the BP September 21st calls, and then we still have the BP October 19th expos open that are up significantly as well. And like I said, we got into Fedex Trade, an official trade. I gave my analysis on that, some stop areas, and this is what we do, guys. We're constantly, every day, we're searching, we're doing scans for new trades. If members have questions and ask me about a trade, actually, Mr. Rhodes asked about CAT the other day. Here was a great, that was back there. This was a great pattern that Mr. Rhodes asked about. I think it was back on the 13th, 14th, somewhere around here. He said, Dave, what do you think about CAT? And he said, do you think it's going higher? He just commented here. He said that's correct on the 13th. So on the 13th, he asked me about Caterpillar. So that was this candle right here. He asked me, Dave, what do you think about Caterpillar? John, what did I tell you Caterpillar was going to do? So everyone could see here. I said Caterpillar was going to go up and it was going to climb up to this resistance area. So this was on the 13th when Caterpillar was at $145 a share. It's now at $156.25 a share, and I told them about that on the 13th here. So, that's what I'm going over as well. I'm going over member questions. If they have charts they want me to go over, I'll show you guys, hey, this is what the chart looks like. If you're in this trade, here's where I would look to take profits. Here's the resistance support areas. Here's how the stock looks to me. Now, to me, like I said, it could possibly go up to resistance right around 160 before it starts to retrace, or it could retrace now since it did have that large climb. It could retrace a bit, possibly come down to this, which is now support. It was resistance back here. It's now support, so it could come back down to what is support now around 152, and then make its climb up to 160. So we'll see what happens there. Remember what I said about candles. If tomorrow's candle fails to break above the previous candle's high, then it might retrace. If we get a candle tomorrow that's above this candle here, then there's a good shot we might make it up to this resistance area. So I told him about that, and he told me he made massive gains on that. That's just one member there, John Rhodes, Mr. Rhodes. And then as you can see here, here's another one from Mr. Foster. He's another student that's just been with us for about a year now, and he said, today is a huge mental day for me. I committed to following your plan, smaller open trades, patience, and longer out expos. Moved my account from $2,500 to $27,000 and out of PT day, pattern day trader roles. So, that's what you're looking for. That's what I'm teaching in the trade room each day. I'm teaching you guys the details, the specific details, what to watch for, what to look for. And then on top of that, we have a great member of community, people sharing their charts, their trades. They're sharing everything. And it's a great community. And that's what we're here for. We're here to help you any way we can. That was the outlook for the market. Now, this week sometime, I'm going to be going over our holiday cyclical trends. So just to wrap it up here, remember, Diamond ETF, look at where we are. We can't even see it because this is in the way here. We had a huge breakout here. And if you could see the breakout for each, either A, tomorrow we're looking for a close below yesterday or Friday's high, or a close above yesterday's high. If we get a close above Friday's high, then there's a chance we might see Dow 27,000 this week. If not, if we don't get a break above Friday's high, then we may retrace a bit, see some consolidation like we see here, consolidation and then the break again. So I'm trying to teach you guys what to be looking for. You see the huge breakout and then consolidation, huge breakout, consolidation. So we just had that huge breakout here. We might consolidate a bit. Like I said, tomorrow, if we have a move above Friday's highs, then we're going to continue to climb for the short term, for that day anyway. So then what we're looking for, micromanaging the charts, is that first day that it has a close below the previous day's high. And once we see that, then we'll know, hey, we're into one of these consolidation profit-taking periods where we come back down to the 10 or 20-day SMA before then having our next climb again. So that's what we're teaching in the trade room each day, every day, along with going over member questions. I'm also teaching, if you guys are new to trading, I'd be glad to help you out one-on-one if I got time at the end of the day or throughout the day. But like I said, it's a great community in the trade room, people asking questions all day, learning. And like I said, I'm here to help you guys. That's what I want to see. I want to see you guys do well, succeed, and learn how to trade. And that's my goal, and that's what I've been trying to do here with you guys. So is there any other questions? You guys have anything you want me to go over, any charts? Like I said, so this is what we're looking for, the diamond coming back here or possibly continuing that break. Now, QQQ is the big one, guys, because I really want to trade tech. Tech has been consolidating. I'm waiting for that break above 185. It retraced big time on Friday. We'll see if that was just from quadruple witching or if there's going to be a further decline back down to the 50-day SMA, the red line down here, or possibly down to support around 180. So like I said, I want to see us stay out of this box. As long as we do, then we're just waiting for that signal to buy stocks in the NASDAQ, the QQQ sector, like Amazon, like I said. So we're watching the Qs there. Once the Qs give us that confirmation that the NASDAQ's heading higher, then we'll enter into a trade like Amazon with our specific targets, and then we'll look at a stock like Google for it to break out of this box here for our buy signal to 1215 to 1230 profit target area, and we take it from there. And that's what we do, guys. We're waiting for specific targets to make an entry. Like I said, Google, someone just messaged in the chat about Google. Here's Google. We're waiting for a make or break above or below this channel here. It looks like we wanted to go above it early Friday, and then the market's just tanked. But like I said, it was quadruple witching, so we'll have to see what happens tomorrow. If we get a break below this channel, then there's no doubt she's going to come back and retest support at around 1110. So that's why we have to watch. There's nothing right now that's saying we're going to continue to climb, of the charts that I just went over. BP, for example, like I said, that's a certain type of trade that's going to continue to climb regardless what the markets do. This is a cyclical trend trade, and it's going to continue to climb. You might have one or two red days like you see here, but, the general trend is going to continue to climb higher from now until our October 19th Expo. And that's what you really have to keep in mind. through every rise here, every climb, every wave higher you had here, you're seeing there's, sometimes 4 days of consolidation before the climb. We have October 19th Expo, which is almost a month away. Each one of these candles represent one trading day. So as you can see here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17, 18, 19, 20, 21. So from here to here, that's 1 month. So you went through 1, 2, 3, 4, 5 consolidation phases in that 1 month. During your consolidation phases, that's when it's time that you could add to a trade, or you could possibly make a new trade, like an in-the-money call spread or an at-the-money call once you see that consolidation phase is over, and then you start to see that climb again. So that's what we're really going over, the details of the charts that you guys want to go over, the current trades we're in, my watch list, and like I said, helping teach new traders how to chart, how to find entry, exits, targets, stops. And like I said, we also do weekly classes like this. This time, some week, I want to go over holiday cyclical trends with you guys, like Walmart, for example. Walmart, we'll go over that. Like I said, I draw up everything on my charts. That's why when I type it up, you're seeing it. I'm already have mental note. Okay, if Walmart crosses above that 10, 20-day SMA, I'm entering into that. That might be Monday. Also, you have to think about when the Dow, when the markets drop, what stocks do best? Your consumer staple stocks, the stocks that, companies that people need, food, clothing, food, clothing, shelter, stuff like that. So your medication. So those are the sectors that typically do well when the markets sell off. So to me, it doesn't matter if the Dow sells off because Walmart, it's part of a sector that's going to continue to climb for the holiday season, first off. And secondly, even if the economy started getting bad, yes, this would retrace a bit. But, you have your core staple stocks that, consumers need. So I'm not worried. I'm saying if the Dow dropped, 100 points, that wouldn't affect Walmart trade too much. Now, if it dropped 300 points and the market started shifting, then yeah, of course, you would be looking for Walmart to go lower here. But as of right now, what the current chart's telling us, we get a close above that 10, 20-day SMA here. We could trade it up to 97.50 up to 100. So, that's what we're looking for. We're looking for a breakout there. We also have some support. Your stop, if you entered a trade like this, if you got that signal, would be your support here right around 95. Let's take a look at Costco. Someone asked about that. Costco, look at this. This looks great right now. This is a great buy. Costco to me would be a great buy right now. You see every time it comes down to that 20-day SMA, it rises a bit and then it breaks out. So it came down to this 20-day SMA, rose a bit, broke out. Came down to that 20-day, rose a bit, climbed above it, just like it's doing now, and then it broke above. So my entry on Costco would be the first candle above the blue 20-day SMA. So if tomorrow came along and Costco was above 235.75, tomorrow, by the end of the day, I would have that as a buy signal and capture that next wave higher. If it fails to break above that 20-day, 10-day SMA, then it's a no-go, and she's going to, possibly head back lower down to either support around 230 or possibly down to the 50-day or 225 support. Costco isn't a stock I follow much, so that's why I have nothing drawn up on that. So we went over Walmart, Costco. Let's take a look at Target. Target's another one. So as you can see, guys, this is something else you keep in mind. Look at Walmart, Target, Costco. So Costco, same thing. Costco, you see it's in the consolidation phase. It came down to the 20-day SMA. Target, same thing. Came down, it had that run, it came down to the 20-day SMA. What's this telling us? This is common sense. It's simple. It's telling us that the retail sector, it consolidated, and it's going to break out. So whatever one does, the others are going to do. And you can tell that's part of the holiday cyclical trend when one of them are doing the same thing as the other, because that to me is telling me that the large institutional funds, the hedge funds, they're the ones moving this stock to these certain areas, and you're getting the climb. Especially when you see multiple stocks in the same sector doing the same thing. That's large funds buying and selling at those areas. So as you can see here, like I said, same thing with Target. Your buy signal is a close above that blue and yellow 10-20-day SMA, and then your target is 90, 90 to maybe 90.50, because right at here, this is where you're going to see some resistance area. So you want to sell it right before it gets to that resistance, because once it gets up to that resistance, it could sharply sell off from there if large institutionals start selling their shares. So that's what we're trying to do. We're capturing certain runs from consolidations to waves to the three main type of chart patterns that I went over in the last 3 classes with you guys, which you can find out on our YouTube channel. And that's what we're looking for. We're looking for those moves that we could calculate, take advantage of, have our targets, exit the trade at specific areas. Our stop would be a close below the previous day's candles low, and you take it from there. So when I make an alert or when I tell someone about a trade, I'm giving you specific stops, targets, buys, sells, as far as what I would do and as far as what the chart's telling me. So if you guys have any other questions, we'll wrap that up. It's already been an hour and 20 minutes. These go by so fast, but it seems like I've only been talking for about 10 minutes here. Anything else, guys? Oh, Salesforce, guys. Let's go over that quick. We've been trading Salesforce for quite some time, and it's doing the same thing you see now. We made a Salesforce trade once it got down to here. We captured a nice return on it. I was trying to look for that right before I started class. It would have been great to show you guys the trade we made on this, the gains that we had on Salesforce. As you could see here, we exited Salesforce. Let's see here. Closed RH and BP for large gains. And then you could see we got Boeing calls. We had nice gains on. Here, closing CRM. That was 6 days ago. So 6 days ago, that was 1, 2. Oh, that's so 6 days ago. Today is the 23. So on the 17th. So here, this is where we closed the trade on the 17th. You seen the email? It said 6 days ago. So the 17th, we closed the trade. Why? Because it failed to break above the previous candle's high. It broke below the previous candle's low. That was our time to exit the trade. We took our profits on the 17th, which was a phenomenal call. And we took our profits. Now we could look to re-enter as long as we hold above that 10-day SMA. And this is what I teach you guys every day in the trade room, and every trade that we make, everything that we go over. So we closed our trades. We took our profits 6 days ago, and we had some nice gains there. Like I said, Salesforce on the 17th, it did exactly what we said we were looking for. We failed to break above the previous day's candle's high. We broke below the previous candle's low. That was our exit point. We took profits right near the top. She consolidated further. Now she's ready for that next wave or run higher. So that's what you're looking for. And that's how we make our trades, guys. It's that simple. If you're following what we're doing, I give details, specific details, what to look for. Like I said, the email and text alerts, that'll tell you guys. The email alerts specifically will tell you guys the stops, the targets, what we're looking for. And then if you join us in the trade room, I'm going over those charts each day along with member charts, anything that's happening in the news, the markets, anything that we could go over. Like I said, charts that we may be making trades on, we'll start looking at them. J&J I liked. Under Armour's been phenomenal lately. I'd love to enter that, and have a target of, $20 a share. It's at 1870 now. So with options, with a small mover, a stock like UA, it has low implied volatility, so options are usually pretty cheap on this. So we can make some significant gains on this from 1870 where it's at now if it got up to that $20 a share. So that's what we're looking for. Those are the types of advantages we're trying to take advantage of. Like you see UA here, we have a nice climb after we got down to a base 30 of the RSI. We're having a nice climb there. We got confirmation to close above the SMAs here. Now, if we got a candle above this 50-day SMA, that is a buy signal, and obviously a target of 20. Since this is a small mover stock, this isn't one I'd go with this week's expo. I'd go with the October 19th monthly expo if you entered into this trade with a break above the 50-day SMA. But as you see here, we're having a MACD crossover right now. We have the rising RSI. We had the drop down to support, a confirmed bounce. We had that close above the SMAs. So that to me, like I said, we just get that close above or climb above that 50-day SMA. It's an easy target to $20 a share or higher, and you can make significant returns with options by doing that. So that's what we're looking for, guys. That's what I try to teach every single day. Sometimes I get a little bit, I get a lot of questions. So if I don't answer your question immediately, send me a private message. Or best thing to do is ask in the trade room, because everyone's in there, and I'm sure there's a lot of people that have questions, just like yours. There's no stupid questions, nothing like that. There's no hate, no negativity in the room. So be open. If you have questions, ask. We're happy to help and there to help you become a better trader. So if there's any other questions, I'd be happy to take those now. If not, going to go and do some research for the evening before bed. All right. Troy, yes, message me on Facebook once this is finished, and I'll go over your private questions with you. Alrighty, guys, so that's it then for tonight's class. Like I said, we're following the three main types of chart patterns, and we're going over what the stocks and the charts are telling us. And as long as we go over those specific things, like I said with Google, we're watching for a make or break above this channel here that I have shaded. Amazon, we are waiting for a move above or below this box here. QQQ, like I said, whatever QQQ does, that's what major tech's going to do. So, like I said, we get a break above 185. That to me is going to be my buy signal to start buying tech, Amazon, Google. As long as we get that confirmed move out of that box I just shared on Amazon and Google. So we do that, and we're going to make large profits. You just have to be patient and disciplined. Follow the trading plan, and you'll reach your goals and your targets. So I will see you guys later this week. I want to do another video, like I said, on holiday cyclical trends. I'm going to gather some info for that video, and we'll do something like that. Another thing, too, guys, I'm trying to find a videographer to do daily videos. I'm looking to hire someone full-time to be here and do like daily trading vlogs. So if you know of anyone, I'm currently looking into that, as I think it'd be great to have a program where you see live day trading and live videos and analysis. The trade room is great. Like I said, that's where we go over all of our charts now. But I like video, and I like teaching like I am now. So I'm looking to do that even further in detail with a videographer. So like I said, guys, if you're new and haven't signed up for TSE yet, you could use promo code TRADE, TRADE, all capital letters. I think that'll give you your first month for either $49.99 or $79.99. It'll tell you once you put it in there what the price is. But you could use promo code TRADE, and if you have any questions, please comment on our business Facebook page, send me a message privately, or you could contact us on our website, thesantarelliexchange.com. And again, that promo code is TRADE, all capital letters, TRADE. And if you have questions, like I said, feel free to message me on our business page, the Santarelli Exchange, or you could private message me on Facebook as well. All right, you guys, have a great evening, and we'll see you in the trade room tomorrow. Take care, and God bless. Hope you enjoyed your weekend, guys.